Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. The euro made a false breakout above the daily MACD line. It's a blue line on the chart. Formerly, it is believed that the dollar strengthened due to risk-off moves by investors following the downward revision of last year's employment data. From March 2024 to March 2025, 900,000 fewer jobs were created. And now, this is being seen as a crisis situation. But this is merely a pretext, as the dollar had already been strengthening since the morning. We believe investors continued to close positions in anticipation of a hawkish stance from the Fed at the September 17 meeting. The daily trading volume was slightly above the average of the past month and a half. The euro is now targeting support at 1.1632. Consolidation below this level would signal a readiness for push to 1.1495. The modern oscillator is in a positive territory, so a breakout below the nearest support is not expected in the next 2 days. Elevated volatility and range-bound trading continue. On the 4-hour chart, the price is approaching the MACD line. Here, the modern oscillator is in negative territory. So, after the price consolidates below the MACD line, 1.1680, sideways movement below 1.1632 is likely. And we're starting with pound sterling dollar pair with Tin Lao. On the hourly chart, the GBPUSD pair on Tuesday rebounded from the 100 Fibonacci retracement level, 1.3587, and turned in favor of the US currency, and began a decline toward the 76 Fibonacci, 1.3482. Today, the pair is stuck between two important levels, so the formation of new signals will depend on which direction the price moves during the day. The wave situation continues shifting toward bullish. The last completed downward wave broke through two previous lows, while the new upward wave broke through the last two peaks. Thus, it can currently be considered that a new bullish trend is starting after more than 2 months of bearish dominance. That dominance turned out to be very weak, since the news background in most cases did not support the bears. On Tuesday, traders could trade under the influence of only one event, the annual non-farm payrolls report. On the 4-hour chart, the pair turned in favor of the pound and consolidated above the 1.3378, 34.35 zone. Thus, the upward process may continue toward the next 127% Fibonacci retracement level, 1.3795. The chart pattern is currently mixed, with traders moving the pair in both directions. At the moment, we would recommend paying close attention to the hourly chart. No emergent divergences are visible on any indicator. That's all for today. See you online soon.